Hey traders, Raghi here. I wanted to record a quick video to walk you through the Sector Secrets Mastery day trading that we do every morning from 9:30 to 10:30. So if you have 1 hour to join us live in the room, 9:30 to 10:30 Eastern New York time, log on in, and what you're going to see is we're going to look for day trades for just this hour. And for a lot of traders, it's a great way to sharpen their order entry skills, their setup skills, because the same type of setups and tools that I use on a 5-minute time frame would be the same types of setups and tools I would use on a 1 hour or a daily. So it's a great way to quicken your learning curve while learning how to do something as effective as day trading. Now, what you're going to see on this screen, and I thought I would walk everyone through because I think a lot of traders might say, Rog, I'm waiting for the swing trading alerts, but yeah, it might be available in the morning. And so this is what we did this morning, and this has really been typical of the summer. And I'm going to walk you through exactly what we did today. And you can check out any of the notes from previous morning sessions, whether you're with us or not, and see what we looked at and what we did. So the first setup, and I'm going to give a shout out to Jeremy in the room who said, Rog, I like PayPal. And this is exactly what we did with PayPal. After the bell rings, and actually we're only trading about 50 minutes, if that, so it doesn't even have to be a full hour. I won't even really start looking for setups until 9:40 a.m. Eastern. And that means I want to let the first 5 to 10 minutes after the bell go by, because look at that opening candle, bonkers, right? Those are candles of unusual size that are very common in the first opening minutes after the bell. You can see here by 9:35 and then boom, 9:40, we started looking at this saying, you know what, this might be a really interesting hourly price movement range entry. This line here is the previous session close, and with price still barely but above it, it made a lot of sense to look for long calls. And you'll see that entry right there. So at 9:40, I'm working up the trade. And this is a 5-minute candle. So it kind of ebbed and flowed for a total of 3 minutes, retesting this level again and again and again. And then we bought, based on the aggressive level, these 75 calls. Now, let me give you an idea of, because I know a lot of folks say, Rog, I'm not sure day trading is worth my while, so I don't want to waste anybody's time, but I do want you to have realistic expectations. A lot of traders start trading with stars in their eyes and, hopes of doubling accounts, and all that's possible. But, I think that this group in the Sector Secrets Mastery, you all are here to manage risk, find a consistent way to find trades, and you're realistic about what's possible. You're not coming here to hit home runs and other such silly things. So I'm going to show you exactly what we did. All right, so this was the move. This candle right there accompanies that move into the zone that we just talked about. So if you look at 9:30, 9:35, 9:40, take a look at the range that the 9:40 candle printed. Now, what you're looking at here is that PayPal 75 call charted based on its price level. So notice most of our members got somewhere between about 155 to 145. Some did a little bit better than that, but that's what you paid, $155 to $145 for that option. And as it moved higher, you can see here, it went up to just over $2.20 per contract. So the big question here is how many number of contracts could you trade if each option costs about $150? If it's 2 or 3, start doing the math, right? And so that's a really good look at the kind of day trading I'm looking for. We're not hitting home runs. We're looking for high probability. Let's get on base. Maybe it's a single, maybe it's a double. Sometimes it's a triple or a home run, but that's really up to the market. And then PayPal just kind of started moving sideways. All right, the next trade that we set up, and notice this too, I put all the notes in the workflow that you all have. So it's always on the screen. You're never guessing at what I'm going to buy and when I'm going to buy it. I'm not calling an audible, nothing like that. I'll skip over Pepsi because it simply did not trigger, but I was looking at it because consumer staples were strong and Pepsi was moving like consumer staples. It did not trigger. The next trade was looking at gold. Now, if I'm trading gold, that means I like something on the GC futures. And again, these are morning trades. And a couple things we knew right off the bat. Gold was heavy. Gold was in a downtrend, as you can see here. The downtrend, you can see with the multi-structure. We were below the previous session close, which is also putting it in the bearish hemisphere. So the probability of gold moving lower was higher. How much lower? Look, we're never going to guess at that, but the probability was for downside follow through. So what we did is we bought, this is what I set up for everybody, the July 23, 316 put, looking for more weakness. The trigger was 34.26 on GC. So you can see we enter that right up in here. And this was closer to about 9:55, 10 o'clock that we were looking at it. By 10:05, we set it up. Beautiful fill. All right, so now we get that movement to the downside. So just like I did with PayPal, let me show you what gold did. And I'm going to chart the GLD 23 July 316 put. So you can see not only what it would have cost, you can see the way in which the value appreciated. Now, anytime I'm day trading, gang, I'm done by usually 10:25 to 10:35 looking for setups, but it doesn't mean that we can't continue to manage these trades through T1 to T2 into the close by simply placing alerts at specific prices and reminding ourselves that we're going to close this trade before the bell. I like to close them out by 3:45, 3:50 p.m. Eastern, about 10 to 15 minutes before the bell. So what did we do? As gold rallied into that resistance level, around 10:05, you can see right here, this is what we paid for gold. So you can see it's about $1.30 to $1.20. Now I'm giving you ranges because everyone responds to these levels in a different way. Some folks like to be a little bit more aggressive. Others like to be conservative. Others will enter inside a zone. So you can see where this thing traded. The range for these candles were anywhere from 132 to 120 and then 156 to 121. So right in that 130 area is where most traders, and a couple got even better fills. I think a couple fills were 121, 126. So you can see the range of what you paid for the option. So again, think about how many approximately $120, $130 options you could buy based on the budget of your day trading account. Now, when I refer to budget, gang, I'm talking about the position size and guide that's available to everybody in the Sector Secrets Mastery. You plug in your account size and it will give you the maximum allowable dollars that you can buy at each trigger, and that will dictate how many contracts you can buy. Well, from $120 to $130, this thing went up clear and past $4. Now, gold had a great move to the downside. That's why this trade worked the way that it did. And along the way, we're going to have a T1, we're going to have a T2, and then ultimately T3 is time. So if all you did was take a look at gold and say, you know what, I bought it, T3 is going to be approximately, I'm recording this around 20 minutes after 3, you're going to basically scale out and close the trade before the bell. Again, this was a really great trade, mainly because gold futures just sunk. And you can see for a good while, this trade went from about $1.20, $1.30 to right around $2. And that even that is a pretty darn good day trade. And then it got up to about $2.40. Even that is a pretty, really good day trade. And then of course it went absolutely parabolic with the drop to just over $4. All right, that was the second entry that we took. The last trade that we set up, you can see here at 10:17, we set up Wells Fargo, and this one was to buy the July 25 82 call. Why did we like Wells? Well, the whole idea behind Wells at the time was the fact that in the morning we had this Darvis. So all of these levels are automated, gang, and then I'll start cutting the zones in half with a simple retracement tool. And the whole idea was to pick up Wells anywhere between 82.83 and 82.75. So it's an 8-cent range. Traders can really buy anywhere between there or at 82.83 and at 82.75. And you can see that's exactly what we had the opportunity to do. In fact, it was even more generous. It went below that level. Well, even with a 15% stop loss on premium paid, we were nowhere near the stop. So we could take that trough without doing something silly like max debit, right? I'm going to risk 15 cents on the dollar. So every dollar I spend, I'm risking 15 cents. So it's never max debit or 100%. And then we sat through, because there was no reason to freak out, right? We sat through this, waiting to see if either we get stopped out or whether we hit the first trigger. And so it kind of moved sideways, and then right in here, bam, we hit the first trigger. Sorry, not first trigger, first target. Scaled out, and then what do? We look for T2, we look for T3, and we just let Wells do whatever it's going to do based on the structure of finding that Darvis above the previous session close and knowing that the likelihood for follow through to the upside is greater. And these are all the trades that we took just this morning. So these were 82 calls. I'll plot this as well. And you'll see that in that zone, these calls were anywhere from about $1 to even 90 cents. Frankly, if there's something I can correct on this, I should have gone a little deeper in the money on these, but this is fine. You're spending about $1 on the trade, okay, approximately. So again, July 25, 82 calls. If I wanted to be a little deeper in the money with the strike, I could have gone with the 81 call. That would have been perfectly fine. They would have cost a little bit more, but here you can see this thing doubled. So you bought this for about $1. It went to $1.90, $2. And that's what Wells Fargo did. But everything was set up and triggered before 10:30. So if you can do that and then place some alerts on your TradingView or whatever platform of your choice, or maybe it's your brokerage platform, and have it nudge you when Wells reaches certain price targets on the underlying stock, you can scale out, which is simply a limit order to sell. These are not complicated trades. These are all long calls and long puts that you can do in a cash account. So pattern day trading limitations are never an issue in the Sector Secrets Mastery. So I just wanted to give you a little synopsis of what we did this morning and what we do every morning from 9:30 to 10:30.